This week, I'll be trading gold, EUR-USD, and silver, and that's all I'll be talking about in this video. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you haven't gotten our chart pattern playbook, do that. Use the link in the description below. Get a book. It's totally free and it's going to help you a lot. Getting started with the gold chart on the 1 hour time frame, we've been in this slow grind to the upside, giving us a potential ascending triangle, right? We've been following this for a few days. I also, sent a chat on our Discord, which is free to join. Use the link in the description below as well. But we seem to be finding it difficult to break out from this area of resistance. So I think this consolidation over here is as a result of our higher area of resistance. So this is the macro area of resistance where you had this double top, and I think price buyers, bulls, they are struggling to push through this area of resistance, but bears are holding us back and preventing us from going higher. But I think this week we're going to see some really interesting results as the year comes to an end. So for me, bearish case scenario will be waiting for price to come down here to the lower bounds of the symmetrical of the ascending triangle, get a good consolidation and a bearish breakout to the downside, right? But for me, even if this happens, I am not going to go short. Okay, I'm going to stay away from going short right now on gold because all I see on this chart is a bullish market structure. You can see price creating higher highs, higher lows. So when you combine market structure with ascending triangle with chart patterns, then all you have to do is wait for proper breakout and go long. I know most of us might have gone long here after a breakout from area of resistance just to get our trade short-lived to the downside. I also fell prey to this as well. It happens if you try to go aggressively, but that's why we preach risk management, right? Because these things happen. So for me, I'm only watching out for a bullish case scenario. A bullish breaker is what I'm watching out for. So more consolidation over here, followed by a massive move to the upside. If this happens, I'm going to go long immediately. I'm not going to wait for any sort of confirmation or any conservative approach. I'm going to go aggressively when we get a proper breakout from this area of resistance, right? Which is exactly what I think is going to happen if the bulls are able to keep to their wits and drive this price higher. So for me, we have a clear structure, higher highs, higher lows, and we have a good chart pattern signifying bulls mounting pressure towards the area of resistance. And I think if we take out this area of resistance, we're going to take out this other one up here. So I don't see price going all the way to this one then being rejected. It could happen, but that's why we have tools like trade stop, so you can trade your position so we get here just in case we get a reversal. But for me, I'm all bullish on gold and I'm only going to go long if we take out this area of resistance. I have one positions layered over here, but I'm going to hold on to my positions to see what happens if we take out this area of resistance. I'm going to add on to my positions. So something I'm using to track this trend right now at the moment that would invalidate my bullish bias will be pulling up the moving average on the 30 minutes time frame, right? So 30 minutes time frame, clearly we have price tracking this trend line quite nicely. So you can see good bounce, slowly creeping upwards. So this moving average at the moment tracks the current trend, right? The current market structure. So all I can see is possibly price moving into this moving average. So we're using 200 EMA, 200 SMA. We get a pop-up consolidation, then followed by a big bang to the upside, right? This is my expectation for this week. So this is a 30 minutes time frame, and I think if this happens, I'm going to go long aggressively, like I said before. But if we do get a bearish breakout, then I'm going to sit back, watch to see what happens, then maybe reevaluate, pick another entry to go long, or maybe change my bias to go short. But for now, I'm not going to go short. So to invalidate my setup would be seeing price come down here into the moving average, consolidating a little, and then going down, right? Breaking through that, this moving average on the 30 minutes time frame. This is going to invalidate my bullish bias. So if you move down to the 1 hour time frame, you can see that we've been tracking this as well, but not as neatly as that's been on the 30 minutes time frame, right? So for now, I wouldn't pay much attention to this moving average on the 1 hour time frame. I'm just going to be patient, see what happens, then reevaluate. Then I'm probably going to make a midweek analysis to share my thoughts if we lose those moving averages on the 30 minutes time frame. But just to repeat once more, I wouldn't be going short if we get a bearish breakout from this moving average. I'm only going to go long after a good solid breakout from this area of resistance. So that's it briefly for gold XAUUSD. Moving on, we'll be talking about EUR-USD. So EUR-USD looks clean. In my opinion, we have a good area of support here, and trend seems to be reversing. So over here you can see that we had series of lower highs and lower lows, but now trend has reversed, right, creating higher highs and higher lows. So in that case, even if we take out this area of support right now, so we're likely going to get a breakout. For example, I wouldn't be going short. The reason is because this move to the downside could be short-lived by any of this area of value, right? It could come all the way down here just to resume the move to the upside, right? So I would rather wait, see how it reacts to this area of value, then look for opportunities to go long in line with the trend. This is exactly how I plan to trade EUR-USD. But for me to go long, I wouldn't be doing that because trades could be stopped at any point within a move, because this is a clear sign of a trend reversal, right? So if we take out this low, then I can consider looking for opportunities to go short, because then this will be another changing trend, right, or a potential changing trend. So for now, I'm only going to look for opportunities to go long. First case scenario to go long would be watching out for a breakout of this pattern. So a move like this, maybe a U pattern followed by a breakout from this trend line, which could signify that we'll go higher and give us an opportunity to go long. So this first bullish case scenario, or in fact the only bullish case scenario I have on EUR-USD right now, we're waiting for a breakout, a good close above this trend line, which will see us set our stop loss underneath the consolidation. This is a breakout, or if you want a wider stop loss, underneath this area of support. If this happens, then we want to ride the trade positions. First take profit is going to go all the way up to these highs. Second one is going to go all the way up to these highs, right? Sorry, this one over here, right? So setting us nicely for higher local highs, right? So that's it briefly for EUR-USD. For me, I wouldn't be going short even if we take out this area of support, because this is a clear sign of a bullish trend, right? Higher highs, higher lows, so a reversal from this bearish trend. Pulling up our moving averages, I love my moving averages. You can see 2 hours time frame, we're still trading above this moving average. 4 hours time frame, we're still trading above this moving average, right? So when price trades above the moving average, it means the trend is likely bullish. So why do you want to go short? All you have to do is wait for price to do its thing, reverse, and look for your opportunity to trade in line with the trend. That's exactly what I'll be doing with EUR-USD. So take note, we take out this area of support. I wouldn't be going short because there's a good chance that short trade opportunity comes into the moving average on the 2 hours time frame and simply just bounces off, right? And if you take a measured price movement, you would notice that this area of resistance could potentially turn into an area of support over here, which could see price bouncing higher because, like I said, the trend looks bullish. So that's it briefly for EUR-USD. If you have questions, leave your thoughts in the comment section down below. And if you haven't gotten our chart pattern playbook, get that book. It's going to help you a lot and it's totally free. Lastly, we're talking about SIVA. So SIVA, this one I love. I've been trading this one for quite some time, over a month now, and we've been banging it hard, right? If you're part of our Discord, you will understand what I'm talking about. So bullish trend, high highs, higher lows. If you've read that book, you understand chart patterns signify an opportunity to go long or go short depending on the trend. So right now, symmetrical triangle over here, good bullish breakout to go long. Now we have a bullish flag. I think this one is going to go higher, maybe as high as the flag pole. So the flag pole is the length from this price level to these highs, and if you take a major price movement from the breakouts like this, so probably going to go up another 200 pips or so, right? So something like this, so 200 pips, I guess. Yeah, around 250 pips. So for me, I'm already in on this trade, so I went in immediately after the breakout from this flag. That's how I trade. I try to go as early as I can, and I think it's going to go higher. But if you aren't in yet, yes, something you could watch out for, right? So you could watch out for a retest of this area of value. So we have an area of resistance here, so there's a good chance we consolidate a little around this price level, right? Then get a move to the upside. This is what I think is going to happen because the trend is still very much alive, right? So something else to watch out for will be 30 minutes time frame, moving averages, 200 EMA, 200 SMA. You can see that we've been tracking this trend with the 30 minutes moving average quite nicely. So bounce, 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 yeah, bounce. I missed opportunity to go long here. So for those people who like to scalp, look for sniper entry, this is one way to do that. Track your trend with moving averages on whichever time frame aligns perfectly well, and just keep trading those bounces till it fails, right? So that's basically how to find sniper position. You can see if you did it here, good profit, did it here, good profit, did it here, good profit. So who knows, the next one might fail, right? But you'd have made some decent returns by the time you get there. So another way to confirm bounce or breakout could be using reversal candlesticks, right? So someone asked me this question via email. So one way to do that, reversal candlesticks, and I'm just going to zoom in one of these charts to see if I can look for a good opportunity to explain what I mean, right? So what I mean is, don't think we have any nice example here. So what I mean is, on the moving average, you could watch out for bullish reversal candlesticks like bullish engulfing candle, doji, spiny tops, hanging man, or hammers, and that could be your confirmation to go long, right? So over here, for example, okay, this is not a very good one, but well, let's see. So over here, for example, you can see this is a spinning top, right? Small body, higher, wick up, wick down. So right, so just to zoom in, so you can see we have a small body, you have wick up, wick down. This could be your confirmation to go long. So when you go long with something like this, your stop loss can be placed underneath the lows of the candle or the candle that came before that. So this will give you a perfect opportunity to go long, right? So this one you can see over here, we have a spiny top, a doji, but not quite nicely into the range between the moving average. But even if you do this, you give yourself enough room for stop loss underneath the candle, then maybe 100 pips, 200 pips. But for silver, all you need is 70 pips and you're good, right? And you see movement to the upside. Then the next bounce, for example, there isn't a solid reversal candlestick here, so you may miss this one if you rely only on reversal candlestick to pick your entries, right? But for me, I go aggressively. I don't wait for those candlestick reversal. We get a bounce, I jump in. We get a bounce, jump in. Quick trades, scalping if you must, right? So that's it briefly for silver. Yeah, to go long, we're simply going to wait for a retest, bounce into this area of value, and wait for that pullback to the upside and go long after the bullish breakout to the upside. Stop loss can be placed underneath the retest if we do get a retest, and you can trade your positions as we go higher because we are currently in price discovery for silver. So if you want to be conservative, right, if you're too scared to go long if this happens, so all you can do is wait for a possible retest of the moving averages on the 30 minutes time frame, which may take a while to happen. So this could go up first, then maybe on the next reversal down, right, on the next reversal down, find a low around the moving averages, then go higher again. So by that time, maybe this moving average might have crept up all the way to these highs, right? So something like this, because the moving averages are not static, right? They climb higher as price goes higher or as time passes. So this is something you could watch out for, right? Wait, if market rallies up, when it comes back down, you could look for trade opportunities if we do tap into these moving averages on the 30 minutes time frame again, just as it did here, as it did here, as it did here. So next one can or might present a very good opportunity for us to go long, at least not until the moving averages gets broken, right? That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave a thought in the comment section down below. If you haven't gotten our free chart pattern playbook yet, get the book. It's going to help you a lot. That's it for me, guys, this week. See you next week.